What's up, YouTube? Blue Collar Nobody here, one more time. I touched briefly on my last video on side hustles. Well, guess what? Right now I'm delivering pizza. So excuse me if I'm not too attentive and staring at the camera. I have to shift gears and drive. But anyway, back to that. I've been working for 2 hours and made almost $60. That's $30 an hour to drive around and listen to music. I barely burned any gas. Not too damn bad. I still got 2 more hours to go. If things will work out right, I'll be happy if I make $90 to $120 tonight. That's fine with me. But what did I do? I drove around for a few hours, listened to my favorite music, and made a bunch of money. Not too hard to do. Doesn't take a really smart guy to do that. But now what I'm going to do is, I'm going to write off the miles through my paycheck at the end of the year and taxes come in. I'm also going to write off the gas, going to write off the brake pads, write off the oil changes. All that gets written off at the end of the year. Those are all business expenses. The money I make from this, I'm going to buy some shares of stock. Or who knows, maybe I'll buy a little silver tomorrow. We shall see. Whatever things look good in prospect as far as making a little profit goes. Exxon was down last week. Maybe I'll buy a share or two of that. I'm not really a short-term investor unless a market dips really hard on everything. Then I follow the trend like I did a few weeks ago, like I was talking about when Trump's trade thing was happening. For the most part, I'm a long-term investor. I invest for dividends. If the stock does not have a dividend, I'm not interested in capital gains. So you won't catch me in Amazon or Tesla. Right now, the share price dividend for ExxonMobil, ticker symbol, which is the symbol the stock market uses to tell you what it is XOM, ExxonMobil Corporation. It's giving me 99 cents for every 3 months. That's called a quarterly dividend. Let me explain it this way. Every time you buy a share of stock that has a dividend, they're going to pay you so much money to hold on to that share. You're giving them money so that they can go invest that money in their projects, whether you're buying, I don't know, tambourines or a company that makes oil, like ExxonMobil. Every company is going to take that money you give them, they're going to invest it to make more money, which is going to drive their share price higher, which in long term is going to make you more profit, or short term, depending on how you choose to get out. But they're also going to have, for the most part, what's called a dividend. Now, that dividend is given to you quarterly. On a yearly annual basis, that's every 3 months. So look at it this way. For every share of ExxonMobil I own, they're going to pay me 99 cents. It's pretty damn good. So you do the math. You get $100,000, you get 1,000 shares of ExxonMobil, you make $1,000 every 3 months. Now you could do two things. You could either take that money out and put it towards your bills or reinvest it in other ways with other things, or you could reinvest it in the stock itself. Now here's where the tax thing comes into play, and trust me, I've tried every way in the world. There's no way to write off taxes on the profit on the market. It's impossible. They've covered every way to do that on the tax codes. There's no loopholes. But anyway, if you take it out and you use it to reinvest in something else, you're going to have to pay taxes on that because it's still seen as income/profit. If you reinvest it in the same stock that paid you the dividend, you're only going to pay, I think, 15% on that, or whatever this year's tax plan is, regardless of who's in office. It changes every few years. But anyway, you get my point. You'll pay less of a tax penalty if you reinvest it in the company, because the government wants that company to keep growing. They want you to keep your money there if it's strong. So that's how that's going to work. So that's how you make money. One side hustle pretty much feeds another. I might have only made $100, $120 for a few months, or a few hours, but at the same time, in a few more months, how much money is that $120 going to turn into? Could turn into $110, could turn into $220. Don't know. But at the end of the day, regardless whether the stock goes high or low, I will still get that dividend, as long as they don't cut it. And that's what I have to warn you about. When a company cuts their dividend, they're in deep doo-doo. They're really having problems with money. If you're with a company and they cut the dividend, or the primary investor cuts and runs, run the other way as quick as you can. Companies are going to dip, and when they do that, that's called a market trend, like what just happened with the whole trade thing with Trump. Once again, when I made money. Everything fell on its face. That's okay. That's called a trend. The market follows trends. Everything falls, you buy anything you want, as long as it's got a guaranteed shot of coming back up. Proven companies like Disney, Walmart, ExxonMobil, BP, all these companies that have been around since the era of whatever for the longest time, they're not going anywhere. If they fall down, that's fine. They're going to come back up. Take advantage of that come up. And then sell or reinvest or whatever you want to do, but that's how that works. So like I said, stick to the side hustles. There are money in it. You should have a 40-hour-a-week job just in case things go ugly so you can always pay your bills. But at the same time, have a side hustle or two. It's no big deal. It's easy to do, easy money. Anyway, got to get back to work. I'll see you. Bye.